Good morning, happy traders. I actually had a question that was sent to me last night asking me about the best leading indicators to implement. So I thought I'd talk a little bit about leading and lagging indicators. So let's jump to it. Okay. So, this isn't going to be a very long video, but normally people are using, say, your moving average indicator, your EMA, your RSI, right? You even have like your MACD, right? So they give you all these selections that you can go into your trading application, and you can come up with these, awesome, different variations of implementing indicators to kind of give you false confidence about what the stock is doing. But some people actually use the indicators very well, right? But they don't use it as, they don't use it the same way that you think they're using it. But, if you can use these indicators, keep doing it, because it's all about finding out what you can do, right? Even if I tell you something like, if I tell you never to use the MACD or the EMA and you're using it and you're winning it, you should be like, Rogue, shut up. Just, you got to do what you got to do. Okay, so anyway, so like your EMA is nothing but, your SMA, and there's like a weight factor. And then you got your current EMA, right? So that's pretty much what the EMA is, right? It's just a combination of other little factors, right? Talk about leading indicators. There are no leading indicators that you probably have access to. Okay, let me tell you what a leading algo does. So, there's something called an LPC. Okay, this is just an example. It's called a linear prediction algo. Okay, LPC. And what the LPC does is that you have something like a system. Okay, you got a system, and this system gives you an output. Your output, the factor of n, right? N is your data. Okay, so if we come over here and I draw it, because pictures are great, and pictures can explain things that words make very messy, right? This would be your N, and over here, this would be your Y of N, okay? And, people might say, well, no one ever uses LPC. Well, actually, we use LPC all the time. It's for, it's an algorithm for voice, okay? So if you were to sample your voice, take like an A to D converter, and your voice would, it's going to do something like this, right? Right? And for all you trading maniacs, this looks a lot like the stock market, right? So what's the model for your linear predictor, right? So it's basically your X of n. Okay, I know, you guys, wake up, guys, wake up. Sometimes this stuff is boring, but you have to stay awake long enough to get the concept, and then you can say, oh, it's good or it's bad. But if you fall asleep during class, you're going to lose the information. And information is very important, right? So anyways, all right, so this is like your expectation function. This is your function there. And this right here, this is called a time varying filter. Okay? Filter. Okay? So your filter, your algos, it doesn't matter. It's all code. It's just code. It's concepts, right? You take the data, you put it through some really, cool algorithm and you get an output. So you're saying, Rogue, what does this have to do with my EMA, my MA, leading, lagging, all that good stuff? Okay, so here's the point. An LPC actually tries to predict the output before it happens. Do you hear me? It tries to predict the output of your data before it happens. The algos that you guys have, I should say indicators, right? It does nothing like that. It doesn't try to predict anything, right? What it tries to do is that, with there, let's change the color here. Where's my thing? So we're going to change this to red. Okay, so what the linear predictive algorithm does is that, if you sample your voice and you drive it through like an A to D converter, right, and put it through some like microcontroller or processor or whatever. This is an LPC, right? That's your algo. You get some output, right? And as you can see, this Y event is the same thing as this Y event here, right? The same thing, right? I don't know if I lost anyone. I shouldn't have lost anyone, right? You're in here, which is along your x-axis, whatever value you pick here, you plug it into this function, and then you get the output, which gives you the data here, right? So what the LPC does is that, the more data you give it, the better it is at predicting the outcome before it happens. So if you give it, 0, 1, 1 right here, it does this little thing, and it says, oh, I think the value is going to be 0 before it even happens, right? The more data you give it, the better it gets at predicting the future, right? So you give it data 1, 0, 1, 1, 0, 0, 1, 1, and then you tell it what is the output. What is the n plus 1? What is that value before it happens, right? Say think of it as, you're trading, right? And you're 20 seconds into trading. You want to know what is the value of the stock at 21 seconds, but you only have enough data for 20 seconds. So it tries to give you the data before it happens, right? That's a leading algo. It's trying to predict something before it happens, okay? The stuff that we have, it's nothing like this. So, no, don't go and try to, some of you guys can code, and don't try to take the LPC algorithm and then implement it into your own little thing. You're going to fail, right? This is just a concept, okay? This is not an algorithm used for the stock market. So that's a disclaimer. This is not used for the stock market. I'm simply trying to give you a concept of what a leading algo does, right? So this is LPC, which is used for voice communication, okay? You got that? So don't go and think you're slick and try to implement this in the stock market, because you're going to lose money. You're going to fail, okay? There's always someone smarter than you. You're going to fail. All right, so that's a disclaimer. Don't use this for trading. This is a concept, okay? So anyways, so this actually tries to predict the output of the data before it happens, okay? So, the average retail trader doesn't have access to the algos that do things like this. Or if you want access to it, you're not going to cough up $50,000 or $100,000 or whatever it is to use it. So what do you guys have? Well, the only leading indicator that you guys have, the only one that you guys have is called price. It's your price action. That's it. That's all that you have. Okay? That's the only thing. You look at the data, and that's your leading indicator. Everything else is lagging. All indicators, listen to me closely, all indicators that you have access to are lagging, okay? Words are very important. They're lagging. I just showed you what a leading algo does. The things that you have, it's nothing like that. I'm not going to go into the actual algorithm because that's not the point of the story. So hopefully, Joey, this answers your question. And for everyone else, have a great weekend, and I will talk to you later.